Welcome to the S&P 500, and as you can see, it's down and it's weaker. And in terms of the wave count, we can see this much here is that this move down here is in little 5 waves. This is back up in 3 waves here as a corrective move, and this is obviously impulsing to the downside. So we're going to get a 5-wave structure through here. It may end at that point there because this situation here, we've got an A and a B and a C to here, and we're thinking that this may be the B wave here and the C wave down to here. So let's just allow that to sort of play out. Yes, there can be a larger bearish picture unfolding as well, which would be down to 1 here, back to 2 here, and then in the next degree smaller, obviously this would be wave 3 coming down through here, but wave 1 here, a smaller degree, and a wave 2 here that we were talking about yesterday, and then the 3rd wave there. So there can be a bigger picture developing to the downside, but we'll see it as a corrective move to the downside for the time being. And this is the same for the Dow Jones as well. We've got this little 5-wave structure here, and down for the 3rd wave here, the 4th wave to here, and the 5th wave to here. So we could end up being, finding support down through here. So let's just see how we go. Of course, the resistance level for the Dow Jones was at 15,500, and that was tested, and it's moved down from that so far. So we've got this here as the next retest supply level, but eventually the 4-5 will be here, and if we don't get a nice sort of clean bounce back up through here and the market sinks, well, we need to be aware that this is group 1 here. So in terms of the 15,000 here, once the market starts to come into group 1 and gets locked in here, then it's it's sort of trapped in there really. At the point of being trapped is in the pivot, which is in the number 2 here, so 1, 2 and 3 here. So if this becomes the retested resistance, then we're going to be seeing much further down through here. So this is a really critical point in here. Normally we get a bounce off the group 1 here, but also too is that as we're moving down, we're getting these lower highs through here as well. And if that's going to be the case when it it finds itself in this situation here, then it's bearish at that point there. So all the trades should have been biased bearish, being under the 15,500 and bullish above that, and that's still the case in this, still the case here as well. But once it gets trapped at 15.2, then it's a part of this here as well. When we look at say the Dow Jones on the daily chart here, just bear with me for a second. Just having a quick look in from this point here. In this particular structure, we've got we do have a nice trend line that's coming through here. Just shape this up a little bit as such here, but from this point here through to here, and then the medium level is that 15,000 I was just speaking of at that point there. So you could see that it could quite easily become trapped in here because we do have a little 5-wave structure up through here. So we are looking at this little 5-wave structure here being in 5 waves, and then we're looking at this one here being in 3 waves here. Okay, so it doesn't have to come all the way back there. Essentially, it can come back into 61.8% mark. So we're looking at this scenario through here. So yeah, that's the 38.2, 5th wheel, 61, anywhere in there is fine. So anyway, we'll just keep tracking this here to see how that sort of pans out. But the Australian market as well, just want to go to a slightly larger picture here just to put us in the ballpark a little bit. So from this is an 8-hour chart here. So pretty much from this low here on this particular chart, we've been counting waves to the upside, and we've got wave 1 and wave 2 here, and we got wave 3 all the way through here. Remember, it was really quite sort of messy through here, but anyway, we got wave 4 in, and then we're looking for wave 5 to come to the upside here now. So once that's finished there, then we should see a move back into the 5,000 from that point there. Now, this little structure moving up here, we should also see 5 waves in this little structure as well. And I think that we may be pulling back for the wave 4 now. And pulling back to the wave 4 now would bring us into 51.25, and then another little move up from that point there. But we also have to be mindful that a top could be in play here. I don't think it's the case. I just think that, Wednesday giving us our sort of volatile, a swing day basically, and Thursday being the bear day in the bullish weekly cycle. So, I guess that as long as if the 38.2 retracement level comes back to 51.25, so long as the 51.20 doesn't become, I'll just get into a smaller picture here. Okay, here we go. So this is the last little 5 waves up, counting from down here. So, so we got up for 1 here, nice little ABC there. We had no problems with that, and then we're just looking for support somewhere to push us to the upside. So sort of up we go, and I've got it sort of counted like this. There's probably a different way to count it as well. So I was looking at this being, this is a nice clean like 5-wave structure here, and then this is a nice B wave in 3 waves. So this would be a C wave here. So the as I mentioned, the 38.2 retracement level comes back to 51.25 into this sort of area through here. And that's normally sort of right as well, because obviously there's been support at these 2 points here, which has picked up this support here. But if this support breaks, then there's nothing really here until we get down to here, a little bit here at the top here, but this is where the support starts next time in through here. But if it gets trapped under the 51.20, well, it's a little bit, then we might have to call that wave 5 in through here. So I can see different ways of counting it up through here, but I still see a building process through here. So I think that we've got another push up here. Now the thing is that the A wave can be in 3 waves or 5 waves. It doesn't really matter. Well, it doesn't, but the B wave's always in 3 and the C is always in 5. Now, we do have a little 5-wave structure in there, all sort of, as it gets a bit sort of shoved up in this case here, but it is there. So we could push up from here. We do have base metals which will firm overnight, so that's, a reasonable possibility. However, this 50 is the line in the sand. So if that becomes the resistance, like it moves, well, the drill, if it moves through there, you don't want to chase it through, but you want to wait for the retest. And if that's there, then you can get it before that if you like. But, you're looking for there, you need to be able to read the volume and a few things in anyway, you know what you know, and you do what you do. So, but anyway, that, expect to bounce off this little sort of area down through here if that's going to be the case. And then if it does climb back up through here and find support here, because if Thursday is going to be the bear day, then and it's on lower volume coming down, which I think that might be the case, because like I said, the metals were quite firm overnight. So, we're not going to see a lot of selling in the metal space. So, it's just the other spaces. So we should see less volume down today, and if that's the case, then we'll see Friday up and also Monday up as well. So that's what we're sort of looking for there. If you can recognise on the Thursday that there is, this is, say if it does move down and it's moving down on lower volume, well then you could probably glean a few positions in certain spaces like gold and some of the other stronger metal mining companies as such. So look, anyway, that's what we're looking for. So as long as this market stays above this here, then it's all pretty much tickety-boo to the upside. But remember that, we're just looking for one more wave up. So that one more wave is just 5 waves. And then that can be the top of that. Not only this 5 wave structure here that we've been chasing, but the bigger one as well, wherever that, if I still got that there, not that one, this one here. So the 1, the 2, the 3, the 4, and the 5. So, we need to be careful there, because what will happen here is that this will just, move back into this space here. I mean, there'll be bounces here, but we'll get something like that here. Alrighty, let's have a look at commodities. Okay, I'm just going to start with copper, and it's only the 25-minute chart, but look, the 330 here is the top of minor group 1, and the top of 333 here, or 3s is always group 1, so developing support on here. It's got a little bit of support there, but always like to see a correction. When I see a correction at the number 3, and then I find support, then I like it more, a bit like this here, so once it's got support, then it's good. And then if you're putting a long trade, you always build in through 1, 2 and 3, especially if 3 becomes support, then you get to the 5. The interesting thing, though, this particular pattern through here is very similar to the previous pattern down here as well. Slightly different, but very similar, and it just goes to point out that stocks markets are made up of perhaps about half a dozen different patterns, and those patterns can be in different sizes, but all like same. And they get skewed around certain numbers and so forth, but it's good to, it's a good form of pattern recognition. Anyway, main point is that copper's chuffing to the upside, and we should be looking up above the 340 all said and done a bit later on. And gold, let's bring this into focus a little bit. So we were counting these up as 1 and 2 and 3 and 4 and 5 up here to make wave 1. Yesterday we were looking for an A and a B and a C to come back a little. We had it down here at the 1300s, the 61.8, and the top of that is a 50%. I'm just going to say that for a while because I like using these circles. I think they're just very simple and clean, So, but anyway, look, as it stands at the moment, we've got the A wave down, the B wave, and then we've got the C wave here in 5 waves. Of course, this could be counted differently with X and Y and so forth, but I just like to keep it as simple as possible all the time. So, look, we do have an A and a B and a C, and it's quite a nice size in relationship to this thing here, maybe a tad small. The move up here, if we've got this wrong, then wrong in the sense that this A, B and C here may just be the A wave, and this can be just the B wave, and then we get a C wave down here to the 61.8%. That's possible, but probably not probable at this stage when we have a look at copper and so forth. So this little trend here, we can pretty much lock that in there. Thanks, Eddie. And the main point here in terms of trading is that you can see that this is shot straight up over here. So we'd never had a reaction here first. So it's got the overshoot pattern, and you can see how that's diminishing in that range is diminishing in size. So it's a sign of weakness. So it's quite probable that we will get a move back here, and it's great if it does. It's good if it moves below the 330 because it's testing the demand below that price point and then finding support on it and then moving up. So that would be your entry there at that point there. So if I'm wrong and you get support on the 5, which is the midpoint. So here we're looking at minor level, and then we're looking at sub level. This is minor group 1 sub level here, and then we're looking at micro in here. So 1, 2 and 3 and then 5. So as we talked yesterday as well on that in the report, in the tech side of it. Anyway, wave 1, wave 2, and if wave 3 moves up, then it will be longer than wave 1. So that's pretty exciting sort of news as well. So in this case here, we're trading what we see, and we're trading the levels, and we're trading the levels of support, and that's that. Silver, As I mentioned yesterday as well, silver never pulled back the same as gold did as such. It was very sort of strong and demanding, so it's already made new highs here. So of course, if you can recognize what a corrective pattern is, and this one is here, but what makes it even better is that when you get support on the closest largest number, and in this case it's the number 5, the second strongest number, the midpoint here, so nice support there, and working up through here. Of course this is on the 1 hour, but if you pulled it apart, well, it would become quite clear in what to do. So if I've got the wave count here right, and you can go and check that and work it all out. I've gone back over it twice, so I think that I've nailed it. And if I have, then we're looking for wave 5 to come somewhere up here. I haven't looked in through here, but I would just guess that's 1, 2, third wave moving up, end of session, weakness, 4th and 5th. So normally it's the third wave that hits on the top there, and the 4th wave that comes back, and the 5th wave comes up here. So then we should have, a larger pattern across, which can come back to that's the support. That's where the volume is. So it can come back to there, but in the first instance, it may only come back to here before, making just expect a larger correction across there, and we'll have a look for that when it occurs. The oil market, yesterday we were expecting this we were tracking little 5 waves up here, as you know, and then we're looking for the A, the B, and the C here. This was the 50% retracement level, the 61.8 retracement level. Didn't come that far. 5 is pretty strong here anyway. So, but our main point was to, look for some type of corrective pattern through here, and understanding that 106.50, bit of an odd number, but there you go. So look, it's got support on there now. So the next level would be the 108. We're looking higher than that. We'll be looking above the 110 here. But the 108 is a profit-taking number. So it's going to be, the bids are going to be hit. It's going to, have some type of correction there. Of course, there's other levels on the way up here as well. There's 107 that obviously can't be ignored. There's also 107.20, which is a 72 number, so bear that in mind. The 107.50, I know that will come into play here, and also the 107.72 here will also come into play as well. So they're just degrees of, structure, price, and work with them accordingly. Anyway, all good. So, good. So, the corn market here. So what we're looking for here is, as you already know, we're looking for, when we're trading, it's not such a great idea to trade wave 4s, and in this case here we've got 2. In terms of Elliott, we don't trade wave 4s. It's because they are overlapping wave structures like triangles and double zigzags. They're just messy, sideways ranging, complex structures they're just filling in time. Normally, when I say filling in time, the 4th wave is complicated and sideways and does take up a lot of time, simply because the wave 3 is always such a long, powerful move. So, these markets are made from us guys, and we're human, and, this was a strong event, and when a strong event happens to us, it takes us time to digest it and, move on from it and all those sorts of things. So the larger the wave structure, then the more time it needs to to rebalance, basically. So, and that's what we're going through at the moment, and I kind of feel that we're just in the beginning of it, really, because we were chasing this 1, 2 and all the way down here for the 3rd wave, the 4th and the 5th here. So we're looking for the low of the 5th, of the 3rd here. So I just still see more, especially when wave 2 is simple, then wave 4 is going to be complex. It's just the thing in nature, and but I won't go into all of that. Sorry about that. I'm just trying to find it on an intraday level. Okay, so yesterday we were looking for wave 4 and wave 5 to come down to the 450 mark here. I was thinking that this was the wave 1, the wave 2 here, and then 5 waves in here for wave 3. and then wave 4, and then wave 5. So that's what I was sort of thinking to the downside there. But that wave 4 may have actually even completed there. So, but the main point here now is that, well, this is group 2 here, the 65, 72 and the 80. So if this market finds support on the 65, then it's in group 2. And if it's in group 2, well, then we can call the low in here and we can begin working on wave 4 here. But while it's testing this here, and it may fail from there, we may get our little A, B and C here, 3-wave thing for the little wave 4 here, and get one more little leg down through to here. This is pretty much the same length as this one here. If that's the case, then we'll look for the bounce off here, and then we'll be working up through that one there. So you'll just need to, see if support is going to be found on the 465 there. That's the main point there. If it is, then we can look higher. It normally pulls back to the 4th wave of 1 lesser degree, but I'm still quite mindful in the bigger picture of the wave, pulling back 38.2%. So that brings us, back up closer to this area through here. So, we just be mindful. If it finds support on the 72, then we can look at that there. But 2 points, it can retest back up here. Wave 4s do get messy, so it's not a good in trade, not a good trading environment unless you're trading intraday. All right, let's have a look at FX. US dollar, wave 4, nice A, B and C wave here, and nice C wave in 5 waves through here. So this should push up from here now, and off the 81.72 area through here. So a push up through here will obviously place pressure on the euro and other pairs as well. So to confirm this in the second step, the 81.80 within group 2 would need to develop support as well. However, that top should be taken out and we should hit 82 there. So that's what we're looking at there. Once that's achieved there, we'll be looking for an A and a B and a C, a larger correction at 82. So yeah, all good there. If this market falls out of group 2 here, then I'm wrong, and we're going to be looking at some sort of larger correction. But it's quite a nice tidy little correction in there, and that should push up through there. So that should leave the euro to the downside. There's 2 possible Elliott patterns here, and one of them is the one that we've got here. So I'll just go back over these a little bit. So we've got the 1, the 2, the 3, the 4 and the 5 here for wave 1, the A, the B and the C for wave 2. And then in this half bracket here, that would make wave 3 coming down through here. So wave 3 in bracket, half bracket, would be longer than this guy here, the wave 1 here. So quite a long, it's normally the length of wave 1 plus another 60%. So it's quite a nice long journey to the downside. So that could be there. And yesterday we were looking at this being wave 1 down to here. And if you remember on the intraday, we were looking for an A and a B and a C. And that's coming quite nicely at this point here. But I have to say this move down through here is not really displaying an impulse wave. So we could have a more either complicated correction across here, or we can have a different wave count. And the different wave count, which is on our website, would be the wave 1, the wave 2, the wave 3, the wave 4 here and the wave 5 here. And then we'd be looking at this as an A wave, a B wave and a C wave up here in 5 waves as such, that could pull back up into this price level zone back up through here. That's the 38.2, that's the 50 on the other side, that's the 50 of course, and the 61.8 there. So they're the 2 scenarios that we've got there. So we need to really drill in, because if that is little wave 2 here, then we can look at this moving down here further. So we need to sort of understand what's what. First of all, while we're here, this is group 2 here, 65, 72 and the 80. So if it can find support within the 80, even on the 65, then it's got a sign of positive. It's had a rejection there so far. Have I got that there? Let me just have a little look at this here. So that little wave two here, which is, I'll just come back a little bit, one step. That little wave 2 in here, okay, that's that little wave 2 here, and that's what we were looking for yesterday. Remember that? We were looking for the A, the B, and the sort of sharp C there, coming back up into this area here. But we've got this very important number here. Now this important number is a 72 number, but it's important because it's just not a normal 72, it's 272. So 272, 772, they just carry more weight, and you can really see that sort of playing out there. So like for me as a trader, I would not go long until that was the support. So there you go. If it finds support on the 65, then you're one step closer to that situation, and you can sort of prepare, and if it tests well in there, well then fine. However, in terms of shorting from this situation as well, then we'd have to use the 50 here. So the midpoint here. So this midpoint would need to don't chase a market through like that. Even here, you see, go through here. Even if you did take that out here, then the market moving back up here, that's your exit. Always with a level. So, but moving down, you want some sort of retest. Now you need to be able to recognize the retest. If it's in 3 waves, that's one way of recognizing it, because that might move back down here and make that 3 waves by crossing over the line there. So that's one way of doing it. Checking the volume coming up through here. If the volume here is got lower bars, like volume bars like this, lower, going up into this space here, then that's divergence, and that's the stuff you see on the indicators. So that's weak there, and that's another thing to short at that point there. There is volume bars on many of these forex platforms. It's not real volume, but it's volume in terms of how much was traded in a particular time frame. So it's sort of it's a price driven volume indicator, and they call it a volume indicator, but it works okay, but you just want to use it in trading terms, because when there's volatility in the market as such, because with a price bar, it could have 10 trades in it, or it may have 1,000 trades in it. So you need to you don't know that, because it's not a tick bar, it's a time bar, and tick bar is obviously better, but most of these platforms have got time bars on them. So anyway, that's enough waffling. Getting back to this point here, the 50, that's your line in the sand. If that becomes the resistance, then look for a short trade there as such. Otherwise, if it gleans up here, then go along from that point there. Okie dokie. So the Australian market, we're looking for, we're still looking for wave 4. Okay, so it's a little bit complicated. We think that we've got some sort of triangle pattern here with the A wave, the B wave, the C wave, the D wave, and the E wave here, and then we go down from there. We've got some sort of complicated system correction coming across here, just not, can't really peg it. If, however, in this situation here, we think it's a triangle because we've got 3 waves here, we've got 3 waves here, and we're looking for 3 waves here. So we know we got 5 here, we're looking for 3 here, which we've got, and maybe finish, we'll check that out in a minute, and coming down through here. So in 3 waves, then the E wave here will be in 3 waves as well. And normally with a triangle, it's like sound petering out. So, it's diminishing into that 61.8 and the 50% all the time. So it's just, it's the most sought after pattern of all, the triangle. And it normally occurs it's always in the 4th wave. You won't get it in wave 2, but you will get it in a B wave as well. But in wave 4, it's normally the case. So look, if we do get 3 waves down through here for the wave D here, this little A, B, and C here, then we know that we're on the right track. We also need to be mindful that this move up here maybe wave 1, wave 2, wave 3, wave 4. Well, wave 4 will be an A and a B and a C, and then moving up from there. So that's possible as well. But yeah, we'll stay with what we've got so far. So what we've been tracking yesterday and so forth is the move down through here. We've got that in 5 waves through to here, so we'll call that the A wave. Yesterday we're looking for a B wave of an A and a B and a C, pulling back up to the 50 or the 61.8 level there, and that's sort of getting there now, isn't it? I mean, that's sort of there. So, and that little sharp move down there kind of helps confirm that. But another way to confirm it is, well, the numbers. So 91, of course, but above 91 is group 1, so 10, 20 and 30. So if the 20, the 91.20, which is the pivot within group 1, if that becomes the retested resistance, then you know that we're on our way of getting the C wave down through here. So the A, the B and the C wave, and the C wave should be in 5 waves coming down through here, should be roughly the same length as this one here. So we should be able to use that from that point there, and we'll be looking down around here at the 90, which we would naturally expect a bounce to go off that, and which would be wave E, pulling back up to, well, supply levels at least, so this one and this one here, and then we'd see it work. So the short trade would come from, this area through here if we've nailed it. Okay, so I wonder if I can just go in here a little bit further. Oh yeah, this is what we're drawing out yesterday. A little bit off track, but you get the idea. So yeah, so I'm wondering, I mean, that's the A and A, B and C for the B wave here. I'm wondering if this is the 1, the 1, the A, the B and the C for 2, the 3 to here, the 4 to here and the 5 to here. Or it could appear like that, especially if this 91.20 becomes the retested resistance. But as it stands at the moment, we've got move down. This is like 3 waves here, so it's sort of corrective in a sense. So we do need to see a little, a 1, 2, 3, 4 and 5. Really, that would sort of confirm it. But using that level there as resistance, that would be very sort of helpful at that point there. But there will be obviously some support here. So we should get the 5 waves in to here, and then an A and a B and a C and a bounce there. So this is where you can grab that there if it starts working down through at that point there. Alrighty, well that's it. So enjoy. Cheers.